Greetings. Welcome to my weekend market recap 2nd January 2022. This is the first weekend webinar in the new year. Wish you all happy new year and profitable new year certainly. I'm Sagar Nandi, retired IT professional swing trading stocks using Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle sagarnandi. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems for making trading decisions. They work as add-ons on the Metastock and TradeStation platforms. Now we'll move on to the live systems. I mentioned that other than looking at the market, I will carry out a top-down analysis as well as bottom-up analysis to see if this is the right time to buy or short stocks or to stand aside. A few days ago, one gentleman who uses Q systems wrote to me showing using the Q graphs that Q finder run on liquid stocks was showing more bearish signals than bullish signals. However, when he looked at Q edge, the home page, it was more bullish than bearish. So he asked me, what did it mean? Q edge was showing sector industry stock advanced decline breadth as bullish, but Q finder was showing more bearish signals using graphs. And I explained to him that market was in such a state that though stocks were mostly up, they were not giving low risk buying opportunities using Q setups. Stocks were going up, but they were already up somewhat from the recent lows. That is not a time when Q will tell us to buy stocks. We like to buy stocks using Q techniques at swing low. Stocks are already off the swing lows. That's why bullish signals were not coming, though the stocks were up. On the other hand, some stocks were down and they were down more from swing highs. That's why it was giving more short setups in finder. The Q edge was bullish, and you might have noticed that also. This happened last week, and I also explained to him because the market was overall bullish, I was not willing to take bearish trades, though finder was showing some signals, and though edge was showing bullishness, there were not many Q long trade setups, so I didn't take any bullish trades either. Now, as usual, I from time to time shared some trade ideas. What I wanted to do today before looking at the market, see how those trade ideas worked out. Did they confirm a trade setup? And if they did, how did it work? I will focus on the ideas that I shared in the USA market, not on the Indian market. Looking back, this was one stock I shared 12 days ago on APPS. Then I shared a possible setup on Citibank 8 days ago and another one 2 days ago on big lots. Let's look at these three stocks to see how they did I'm not going to open the analysis that I shared originally without knowing the result. I'll just look at the stocks. Why I am doing that? If you plan to take some trades or actually took some trades based on Q setups, how they perform gives us an idea of the market is in line with what we are analyzing or not. If the trade setups are not confirmed, or if the trades we already took are hitting stop loss before hitting initial profit target, that we know that the market is not in the right state to take trades. Now let's look at these three stocks. I didn't share a lot of stocks in recent days. Let's start with apps. Digital Turbine. It displayed a bullish headwind, created a false downside breakout at the watermark support in both daily and weekly, and it had a trend line support. I shared the idea on this day, and in fact you could buy it during the day. The signal day was one day earlier. Stop would be just below the trend line support, which would also be below the recent low. Somewhere here the exact position would be decided by Q protection signal. So this was the stop loss distance, and then the stock went up enough to cover much more than the risk distance, and we would book trade in the swing trade. So apps worked out fine, perfectly in fact. Once again, buying swing low using trend line support, bullish headwind prior to that, and a false downside breakout worked beautifully. There is no reason not to buy swing lows, in fact, even if the stock is not in a confirmed uptrend, as this example shows. If you notice carefully, it was below the yellow direction line, below the white direction line, but that was fine. In Q trading, we put a lot of weightage on the pivot supports, watermark supports, and also trend line supports, because they are zero lag indicators, and using that we can buy true swing lows, as we did in this case. Apps worked out. After that, the USA market idea that I shared was on Citibank. It had a bullish headwind. I shared the idea somewhere around this area and told in the post that we will look for a bullish confirmation, bullish close, but that did not happen. If you see all the candles in this area, they ended with upper tail or doji candle on the last trading day. Upper tail also on that candle. So none of the candles since the time I shared the possible buying idea closed with a bullish shape. Therefore, the Q long setup in Citibank was not confirmed. That was something we would have noticed, that we wanted to, at least I wanted to buy Citibank, but it didn't confirm the trade setup. Then the last idea on the USA market I shared was on big lots. I shared it on this day, and if it had closed with a bullish shape candle, I think it would have confirmed a bullish breakout, but that did not happen. Once again, this candle closed with an upper tail, and the last trading day of the year also closed bearishly. So we didn't have any confirmed breakout in big lots as well. So apps worked out, that was, I think, let's go back. Apps worked out, that was shared 12 days ago. Confirmed the setup, then hit the initial profit target. And the next two setups, Citibank 8 days ago and Big Lots 2 days ago, they actually did not confirm, so we would not take the trade. But that was also providing useful information. After looking at Q360 degrees techniques, I wanted to buy them based on confirmed setup, but the setup didn't confirm for any of them. Also told me something important, that bullish trades were not working out, and the reason would be what I mentioned earlier. One gentleman wrote to me, and you might have noticed, though stocks were going up, they were not giving enough valid long trade setups. Having said that, let's look at how the markets are, starting with global market, Australia market first, all ordinaries. In the weekly, it is inside a range at the upper edge of the range, closed right at the trendline resistance, has bearish indecision at the top. In the daily, inside a range bound by watermark support and resistance, created a false upside breakout on the last trading day, which also displayed a bear release signal, closing decisively below watermark resistance with a very bearish shaped candle. This is giving a possible box short setup in the daily time frame, though box setup conditions in the weekly time frame are not being met. Under such a circumstance, we may drill down into all ordinaries and look for bearish setups in individual stocks that are fundamentally weak. It's range bound, and preferred trading direction will be bearish, not bullish at this point. Topics: Japanese market. Inside a triangle both in daily and weekly, right in the middle of the triangle with an indecisive doji candle on the last trading day of last year, no trading area, range bound, no preferred trading direction, will stand aside. Next, China CSI 300. This may be getting ready to give a long trade setup, and this is also an example of how Q traders like me patiently wait for the right time to buy. Earlier, CSI 300 was in a range I was not going to buy. When it broke out, I mentioned that Q traders in general and myself in particular, we would not chase the breakout, we would wait for it to pull back and then give a swing low, which had happened on this candle and also happened on the last trading day of the year. Both of them had bullish flow. Did they give go with flow long trade setup? No, because the weekly did not turn cyan. For go with flow long trade setup, we need the weekly to be cyan. That did not happen, but that was okay. When we had the two bullish flows at a swing low after the breakout and a pullback that created higher low, we could look into constituent stocks to look for buying opportunities. CSI 300 is currently in an uptrend because after breakout it created higher low. Bullish flow is there. It is in an uptrend and preferred trading direction is long. Next, Footsie Index UK market. Inside a range in weekly, very near this trendline resistance, the second one in weekly with bearish indecision. In the daily, it is at the upper edge of a range, created a false upside breakout at the watermark level with a bear release. There is no trade setup in Footsie itself because the weekly color is still cyan. However, it is at the upper edge of the range with a bear release signal. So I will look for shorting opportunities in constituent weak fundamental stocks. Range bound, preferred trading direction, bearish. Nifty 50 India market, weekly bullish backdrop, daily bullish flow, and a breakout, quite decisive breakout, which closed above the yellow direction line. It was in a downtrend earlier, but now it has broken out of the trend line resistance. Therefore, for Q technique, we can start to buy individual stocks that are giving valid long trade setup. If you look at highs and lows, it is still in a downtrend, but we are allowed to buy because it has broken out of the trendline resistance. Weekly backdrop is also bullish. So here, though it is technically in a downtrend, preferred trading direction is actually bullish. Now let's look at the USA market, starting with S&P 500 ETF SPY. But before that, let me summarize the global markets. China breakout, preferred trading direction, bullish. India breakout from a downtrend, preferred trading direction, bullish. The rest of the markets are moving sideways and preferred trading direction is either bearish, as was for Australia and UK, or stand aside, as was true for Japan. So a mixed picture from the global markets. Now USA market, I saw that the two last ideas did not confirm the trade setup. So I'm anticipating that I'll not find many bullish ideas. The last two ideas I shared were both bullish on Citibank and big lots. None of them confirmed. So let's see if the market ETFs are telling the same. S&P 500 ETF, it went up right from this trendline support. And if you remember my earlier webinars, right at that time, looking at market ETFs, in this case SPY daily weekly support, and also looking at market breadth, I suggested buying right from this point. That was well before Can Slim's follow through day and even before HSI Styles Eureka Day using trendline support. These supports work beautifully, and using them, zero lag indicators, you could buy at literally the bottom of the swing. And what is happening now? It is at a swing high. And as I mentioned, swing high, however, bearish indecision at the top, another bearish indecision at the top, and a bear release in between. It is still above the watermark resistance, but if it goes down little bit next week, it will create a false upside breakout. That is a time to look for shorting opportunities. May not be in SPY because I see the weekly is still cyan, but I am sure if SPY is creating a false upside breakout with trend line support some distance away, we will have low risk shorting opportunities in individual constituent stocks in an uptrend, but preferred trading direction is bearish for me. Now in the last webinar also I mentioned when price was near the watermark resistance here where bearish headwinds had come earlier, I mentioned that my preferred trading direction was bearish at that time also. And later on I showed that my preferred direction was bearish. However, the market was not going down, so I did not execute the bearish trades. I tried to find some bullish trades, but they did not confirm. Currently, my view is looking at SPY at least that preferred trading direction is still bearish. And that is interesting because USA market SPY made a new all-time high. Preferred trading direction is bearish for me, whereas India, which tends to be quite well correlated with USA market that is actually breaking out from downtrend to the upside, and there my profit trading direction is bullish. So they are not in sync right now. Is that the same conclusion from other market ETFs? QQQ, yes, same conclusion. Bearish indecision at the top. Last trading day and previous day price came down little bit, more at the upper edge of the range than at the lower edge, so preferred trading direction is bearish. QQQ may not give a short setup, but individual stocks may. Sideways, preferred trading direction bearish. Dia, same thing. Already created a false upside breakout after creating a new all-time high just on this day. At least on the intraday basis, created a new all-time high but closed below the watermark resistance. So on closing basis, that was not a closing all-time high. Closing all-time high might have been the day prior to that. In any case, if we look at the right edge, now we have a false upside breakout, bear release signal, bearish indecision, candle with upper tail, not bullish signal. At upper edge of the range, preferred trading direction, bearish. And last of the market ETF, small cap, IWM, still in a downtrend with lower low, lower high. Whenever we see trend line resistance, then we know it has lower high. And then what we are seeing? Indecision, bearish, indecision, bearish, indecision, bearish. Last 2 days, very bearish shape candles with long upper tails, almost no body. Preferred trading direction has to be bearish. Trend, in fact, downtrend. Downtrend after recovery, if it tilts down now, that is a go with flow trend following short setup. If the weekly does not confirm with a magenta candle, that's fine. If IWM tilts down, we will surely find shorting opportunities in small cap stocks. So USA market, all the market ETFs are either moving sideways or downtrend for IWM, and my preferred trading direction is remaining bearish. I will still look for a confirmed Q trade setup before shorting stocks. I'll keep an eye on that. Now, if that is the conclusion from market ETFs, what extra insight can we gather from market breadth total view? If we look at the custom index that is plotted here in the candle charts, created from two composites, Nasdaq, Nyse, and four major indices, Russell 2000, S&P 500, Nasdaq 100, and Dow Jones Industrials. What is the candle chart telling? Already some distance away from recent swing low, we have a bearish shape candle on this day, indecisive candle on the last trading day, which also showed bearish indecision at the top. Closer to the all-time high, which is the upper edge of the range, than to the trendline support. Therefore, my preferred trading direction has to be bearish, already near the upper edge of the range, though there is no bearish setup yet. What can we see from the market breadth total view? The yellow line, percentage of stocks above 50 MA, it did recover. However, it stopped at the midway, 50% level. From that angle, it did not turn bullish. It was in a downtrend here. Then it went to the average value. If it tilts down from a breadth perspective, it will give a trend following short setup. We don't have any accumulation distribution big enough in the recent days, no Hindenburg as well. So we have no signal from there. 3-month new high low, when it is at an extreme, we look for reversal. It is not at an extreme. In the upper half, bullish, but not at the extreme yet. No signal from there. Growth versus value, magenta line. Earlier, it was sharply going up. Growth was doing better than value. Now it is tapering off. Not in clear downtrend, moving sideways. So growth, value, none of them are doing extraordinarily better than the other. And small cap versus large cap is continuing to go down. So small caps are doing poorly overall. Let's look at Nasdaq versus NYSE. I'll do that quickly. Right at this point for Nasdaq, when it hit the 20% level for percentage of stocks above 50 MA, that was the buy point. That is the way I use percentage of stocks above 50 MA as oversold overbought indicator. At 20% level, it became oversold, and that was the time I was starting to buy stocks, and that was the time SPY bounced up from trendline support. NYSE reached almost 20% level here at both of these 2 points, in fact. So you could start to buy at this point. Again, that was the point SPY bounced up from trendline support. Right now, percentage of stocks above 50 MA for NYSE at 50% level. For Nasdaq, it is around 30% level. So Nasdaq overall from this angle is 20% weaker than NYSE. A reason to avoid technology stocks or Nasdaq stocks relative to NYSE stocks. I will not go through the other signals here. Let's now look at some other breadth insights looking at mega caps. Using custom mega cap index, it is inside a narrow range. So narrow that we may not have trading opportunities here. Too narrow, the reward is not large enough for this custom index to take a short trade, but if at all we were going to take a trade, that would be in bearish direction because it is slightly closer to upper edge than to the lower edge. But the distance between closing price to the trendline support is too small to take any short trade. We have to say it is moving sideways and no trading opportunities. Not bullish at least. The last few days indecisive shape and gradually very slightly coming down. We know that from the activity bars being red color, and relative performance is quite sharply tilting down, showing it is not the time to buy mega caps now. And if we look at leaders index, the custom index created from stocks that used to be the best of the best in this area. The leader index is inside a range, wider range than the mega cap index. It is right in the middle of the range. That is also no trading area. And interestingly, this was composed of the best stocks in this area. Now see the relative performance is tilting down. So we are not going to buy. It's not giving any short setup also in the middle, right in the middle of a sideways range, no trading zone. But we can see overall it is underperforming the market for several weeks and months. In fact, for almost 2 months, it's underperforming. So we are not going to consider buying. So whether we look at the market ETFs or market breadth total view or the leader index or the mega cap top 20 index, none of them are telling us to buy. That is probably why the last two long setups did not confirm. Now let's look at the market from few other angles. Sector, industry, stock advance decline breadth 1 month to 1 day. one day, the last trading day of the year, is slightly bullish. So slightly bullish, we may say it is neutral. And also, it was the last trading day of the year. That was a holiday season, very low volume day. We have to say that was a neutral day, and that is expected. Last trading day of the year. 2 day period also, we can say it's last trading day of very close to that. So we cannot make much sense of the colors of last 1 day, 2 day periods. 5 day period is bullish, holiday shortened week. 10 days bullish, 1 month bullish. So here, if we leave aside the 1 day, 2 day periods, 5 day, 10 day, 1 month are bullish. In fact, 10 days and 5 days are bullish so much that you may say it is nearing the overbought condition. You see, all of these percentages are above 80% across sectors, industry, stocks. When it becomes above 80% for all of them, then it is becoming overbought. But the overbought condition is not there in the last few days. So from bullishness over longer term, if we shift to the smaller time frames, we see gradually it is becoming bearish. The market ETFs did not give any bearish setup yet, but this view is in sync with my preferred trading direction that I decided already based on candle charts, that it is allowing me to short. Gradually it is turning from bullish to bearish, from longer time frame to shorter time frame. What about the bucket analysis? Earlier, when the market dropped, the percentage of stocks here above mid Bollinger Band was very small. Now it is above 84%, very high. From downtrend, it came to uptrend. From that perspective, bucket analysis perspective, is it overbought? Not at all. Bucket analysis becomes overbought when the percentage of stocks in the most extreme bucket here hits 30%, 40% or so. Currently, it is only 2.2%. So it has become bullish, but nowhere near overbought. It's not giving any trading signal from this perspective. Lastly, we look at the technical breadth. First, look at the weekly picture. Weekly picture is in sync with what we saw from sector, industry, stock, advanced decline breadth. Very bullish overall, 80%. Strength signal, 90% bullish. Trend continuation, 83% bullish. Reversal is also bullish, 59%. The headwinds are not giving any decisive signal. Overall, weekly time frame is bullish. What about daily time frame? It is mixed. That is again expected. The last trading day of the year, neutral, you may say. No clear signal from here. We have more than 1%, 1.4% of stocks giving bearish headwind reversal signal on the last trading day. We may not make much meaning from the last trading day of the week itself because it was very low volume day, but the market ETS, market based studies, leaders index, mega caps, they all told us it is safer to take, safer meaning lower risk trades will come from bearish direction, and we can see some bearish signals here. Now let's start to do the bottom up analysis. As I explained in Twitter, I'll try to do bottom up and top down analysis both, trying to find trade setups, and I may try on both sides, bullish and bearish. Now I am on Finder and I see number of bearish reversal signals more than bullish reversals. What kind of trades am I looking for? They are probably reversal setups, isn't it? Because the market ETFs are also reversing from swing high, either range bound or downtrend for IWM. But in all of the four market ETFs, I'm looking for reversal setups at swing high. And I see number of reversals in the bearish direction is much more, 69%, than bullish reversal. So it makes sense to look for reversal short setups using bottom-up analysis. So let's go to the bearish signals. Let's look for headwind. I see 19 headwinds are there. Let's flag for them. They are down by not much percentage. Again, the last trading day of the year was low volume. Let's just look at the few stocks that went down by, let's say, more than 0.5%. Usually I would look for stocks down or up by at least 1%, but as you can see, at least for the headwind reversal signals, we didn't have any stock down by more than 1%. That itself is telling that it was not bearish. Of course, we know that already from the overall graph. It was neutral day, but let's look at these charts. See if we have a low risk headwind reversal setup in any of them. WBA has a nice reversal. Okay, it seems my finder is not this computer I am using here. The bearish headwinds are actually on the prior day, not the last trading day of the year. Okay, let's see if I find any trade setup. There was a bearish headwind one day prior to the last trading day of the year. However, there is a trend line support nearby. Walgreen Boots Alliance. I'll not be able to buy now because of the bearish headwind, because of the trend line resistance, but I'll not short because the trend line support is nearby. Nyse had a bearish headwind. Let's look at the 3 chart template to see if it is confirming the headwind short setup. No. The headwind signal came, but the headwind setup requires the weekly to be of neutral color or bearish shape or condition. But none of them were true. So we did not have any headwind short setup. I'll be careful if I had a long position because the headwind setup came and because it is at high thrust, but there is no short setup. Okay, close. Next one, Humana. This is looking better for shorting. There was a bearish headwind one day earlier, but I would not be shorting because it was above trend line support. And last trading day of the year, it closed below the trend line support. Therefore, it has created a false upside breakout with a bearish headwind with a breakdown with a bear release as well coming out of squeeze. So this is the stock I would like to analyze again with 3 chart template, weekly, daily. Humana, yes, this is giving me a low risk short setup, breakdown short setup because it broke below trend line support, weekly reversing from trend line resistance, opposite of what I like to use for buying. For buying, I like to look for stocks at weekly support breaking trend line resistance in daily. Weekly support, daily breakout, long direction. And here we have weekly resistance, daily breakdown. This is the perfect time to short with very low risk, and we have additional confirmation from bearish headwind one day earlier. What does it also mean? That is that looking at the bearish headwind, and we could look at the finder, do the bottom up analysis, look at the headwind, we would not short on that day because it closed above trend line support. We would be ready and we could short right at the open on this day, and by the close we already had some profit. We would be trading using intraday time frame in that case. This is giving a valid breakdown short setup in daily. Also weekly has trend line resistance. This is the time I will go to look at the stocks fundamentals to see it has some weakness in terms of fundamentals or not. Let's do that. Humana, capital or small letter, both are fine for the USA ticker symbols. For some other countries, we have to use some countries, some futures, etc. We have to use proper case. For USA market, when you use the ticker symbols for definitive, we can use small or capital both for stock symbols. Humana, let's look at the fundamentals. Valuation in the middle, earnings growth is actually strong. Next earnings day, 2nd February. Industry in itself is weak. 64% of peer stocks are weak. So fundamentally not enough weakness, but let's still see the relative strength of the industry, that is managed healthcare. That is weak. Instantly we can see it is allowing me to short. So Humana, in terms of fundamentals, not weak enough, but I mentioned many times that when applying the 360 degrees technique, only one dimension I am willing to be somewhat flexible, that is on the fundamentals, and that is on the short side, which is true in case of Humana. So I may look into Humana's peers now. I'll not do that analysis now, but you saw 64% of Humana's peers are okay. Why don't I do that quickly? Let's look at the peer stocks. Let me try to find 1-star weak candidates, either weak in terms of valuation or earnings growth. And we have these few stocks. Let me look up their technical signals. From the bearish signal, I have PGNY. That's the only stock that is down, that is also fundamentally weak in some way, one of the Humana's peers, but it does not have any trade setup. No harm looking at the stock still. If it doesn't have a setup today, maybe it will give a setup tomorrow. So let's look at that PGNY. Well, it is following the pattern that is there in the market ETFs. Showed the bullish headwind right at the bottom, went up when SP was going up. Maybe it started to go up after the bullish reversal headwind signal, little bit ahead of SPY, and now it is toppling over after creating a swing high at white direction line, relative performance tilting down. No go with flow short setup, but the stock is looking weak. So PGNY could also be a shorting candidate, same industry as Humana, but it is already in a downtrend. You may consider shorting PGNY using intraday time frame next week if it goes down, and I will like to short only if markets are also coming down. Just like in the previous weekend webinar, I mentioned my preferred trading direction was bearish, but the market didn't come down. If next week market comes down, we found Humana, HUM and PGNY progeny as possible shorting candidates. Now I closed all the stocks. I'll not go through the other stocks that I found from bottom up. Let's try to do a top down. And for top down, starting with QH, let's try to find bullish stocks. Let's look at the sectors. I could look at sector relative strength, or I could look at sector percentage. I usually use sector relative strength. That is more clear visually to me. I don't want to look at numbers so much. The strongest sectors on the last trading day, they were industrials and consumer staples. Consumer staples, defensive; industrials, non-defensive. I see industrials also had, you can see from here, the biggest acceleration. So industrials is definitely a sector to look for buying candidates, and consumer staples also will look for. So let's drill down into the industries, see which of the industries were strongest in these two sectors. I'll sort them by relative score. Look at only the industries with checkered background. That would be the industries among the top 20% of all industries. In these two sectors, industrials, consumer staples, but among top 20% of all industries overall. These are the industries. Let's drill down into S&P 1500 stocks for now. By the way, when I click that button to drill down to underlying stocks, I am so used to looking at this analytics that something caught my attention, and I'll come back to that. Why not I go back to that now? When I clicked and drilled down to stocks, my eyes were looking at the industries, and I noticed that the top one, made in, related to transportation. Then here we have railroads related to transportation, and here we have trucking. So we have three industries related to transportation, barring air transportation, marine, railroads, trucking. Three of them came among the top 20%, and also they belong to the industrial sector, the best performing and most accelerating sector. And these three are very related. So if I find transportation stock going up, I'll be very happy to consider that as a buying candidate. Even though the market ETFs are telling me that my preferred trading direction is bearish. That is from market angle. Sometimes industries may go against the market. And here I find three very related industries among the top industries in the best sector. So that caught my attention while I clicked the button to drill down to the stocks. So we may see if any of the stocks are giving buy setup in those transportation industries. The more you use them, the more you get used to find these correlated industries coming together. Okay, these are the stocks. Let me find at least one star. I would normally start with crown jewel, then go to 3 star, then to 1 star, but my preferred trading direction is bearish, so I am not so picky for bullish trades. I just clicked 1 star. Now I have either undervalued stocks or high growth stocks, and I see 1 day percentage. And here I see many stocks had more than 1% change on the last trading day. So I'm happy to restrict my analysis to the stocks with 1 or bigger percentage move on last day. So let's see if they had any trade setup. All the systems are integrated. I looked up their technicals from Finder. In fact, none of them are giving a trade setup, which would be in orange color. Oh, I understand why. Because this is not run on the last trading day. They are actually showing as down here. So no problem. What I am going to do, I'm going to open those stocks anyway. Sorry about that. My Finder on this computer does not have the latest day's data. No problem with that at all. I am going to take these stocks. Let me use trace station in this case. Drop them in Sonar. Drop them in this, or rather this one, to see which one of them have, which ones have trade setup on the last trading day. I didn't run Finder for the last trading day on this computer. That's fine. I see several breakouts are already coming. Let's look at them. ENR has broken out of one trendline resistance, but another resistance is very close in daily. Weekly also has resistance. I'm not going to consider buying that. ENR, exclude. Next one, VRTV, also breakout with high activity. I'm actually, while I'm looking at them quickly, I'm reading them out. High activity breakout with a pocket pivot. Bullish direction, relative performance is strong, low volatility, that's fine. Let's look at the chart. This has a breakout with high activity, but it closed with a small upper tail. If it goes up next week, we may consider buying. Miscellaneous capital goods, so industrial sector, the best performing sector. Has a pocket pivot, not many other momentum signals in the alternate chart. In the Q chart, entry template, breaking out of squeeze, breaking out of squeeze, breaking out of trendline resistance. Not the best looking buy setup. We'll see if we can find a better buy setup. Incidentally, the bullish headwind came near the very low. There was no bearish shape candle that closed below the low of the bullish headwind candle. There were two candles that closed lower, this one and this one, but none of them had bearish shape candle. The lower tails told us that buyers came in, which was also showed by the bullish indecision at the bottom. So once again, the bullish headwind was very useful to catch the bottom. Now we are looking for a possible breakout with high activity also. And this is one star candidate at least, so fundamentals are allowing us to buy. But let's see if we can find a better trade setup. I'll save this one. VRTV. CLH is the next one. It has a breakout also. This is looking better. Remember what I mentioned a while ago while analyzing Humana. Humana had weekly trendline resistance, daily trendline breakdown. Here, opposite. I, that's one of my favorite setups for buying. Weekly trendline support, daily trendline breakout. Once again, bullish headwind came at the bottom. Here we had a very long lower tail candle with bullish indecision. So in fact, from the beginning of this week, somewhere here you could start to buy, which would already be profitable. You could book partial profit at the trendline resistance, hold the partial position, and now it has broken out. There is a small upper tail on the last trading day. If it continues to go up, it will give a buy setup. This is CLH. Let's check the industry. CLH. Environmental and facilities. Okay, not a very common industry that people trade, but that's fine. Let's look at the stock again. This is in fact a 3-star candidate, undervalued with earnings growth. So I searched for at least 1 star, and this is 3-star, undervalued with earnings growth, definitely a buying candidate. Let's see if we have a better than CLH buy setup. So CLH is looking better than VRTV. Do I have other breakouts? No. Oh, I have one, GVA. Let's look at GVA. Here it has a breakout in the daily, and interestingly the bullish headwinds came near the bottom, but in the weekly it is in the middle of a range. So I already have a better looking chart in CLH. Even VRTV is better than GVA. Let's exclude GVA. I'm trying to find the better candidates. Any other buy setup? Buy setups are these capital, full capital names. So no more breakout, no more headwind, no go with flow, no pullback, no box. So we don't have any other long trade setup. So we found some long candidates, possibly CLH, not many. With this top down approach, when I did bottom up, I found some possible shorting candidates, maybe Humana, maybe it's PR, PGNY, but not a lot in either direction. So the best course may be to keep these stocks in mind: VRTB, CLH long direction, and Humana, PGNY, and there may be few others in both directions. Keep them in radar or ICOT, whichever you are using, and see how the market is moving next week. If it is going up, look for buy setups in CLH, VRTB. If it is going down, look for short setups in Humana, PGNY or similar stocks. Market is not very clear. My preferred trading direction is bearish, but if it goes up, I have some buying candidates identified for that as well. We are at the 1 hour point. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next public session, which will be most likely next weekend, the same market recap. Have a great weekend. Happy New Year again. And in this new year, no reason not to do that again. Trade profitably. Thank you.